Hello, I'm here today to explain to you about the UK government's R&D tax credit scheme. We're going to start off with first principles, understanding what the scheme is, how it works, and how you can use it to increase the profitability of your organisation. With all the talk about different sorts of tax credits from the government, it's worth reviewing what the R&D tax credit scheme is. The purpose is to promote R&D in the UK by giving a financial incentive to companies that are carrying out research and development. The incentive takes one of two forms, either a tax credit, which is a cheque to your company from HMRC, or tax relief, which is a reduction in your company's tax bill. Usually, the biggest difficulty a company has is in knowing what will qualify for the tax relief. There are lots of misconceptions and preconceptions in this area, as on many occasions companies think of what they do as business as usual and not blue sky research. To claim R&D for tax purposes, you don't have to be doing this or this. Your company doesn't have to be employing mad scientists or building rockets to be carrying out R&D for tax purposes. A simple, quick question to ask is whether your engineers or developers work on projects where they have to solve technically difficult problems. If they do, that part of their work may qualify for R&D tax relief. So, to summarise, what counts as R&D for tax purposes can be much broader than the traditional idea of what is R&D and what is not. If your company employs software developers or engineers, they may be performing R&D for tax purposes without even realising it. For a project delivering a new or appreciably improved product or service to qualify for the R&D tax relief, it needs to fulfill two criteria. The first criterion is that there has to be what's called a technological advance. What that means is that we baseline the state of science or technology in the industry at the beginning of your project, and then we look at where your company was trying to get to in terms of its technology goals, and that gap between where you start from and where you're trying to get to forms the technological advance in the R&D project, providing the work is not routine in nature. Now, in terms of what's considered routine and what isn't, that ties in with the second criterion, which is the resolution of technological uncertainty. The concept of technological uncertainty is where a solution isn't publicly available or readily deducible to a competent professional working in the field. You may need professional assistance in determining what falls into this category, but the project for R&D tax purposes is considered to have started when work to resolve the technological uncertainty is started and ends when the technological uncertainty is resolved. And it is the costs associated with that resolution of technological uncertainty, although not those of other project activities, that are qualifying for R&D tax purposes. So, how much are R&D tax credits worth to your business? There are two schemes, one for SME companies and one for non-SMEs. To find out if you are an SME, you need to refer to the EU definition. This definition is somewhat complex as you have to look at the entire ownership structure of the group that a company is in, but broadly speaking, if the group has less than 500 employees and either less than 100 million euros of assets or 86 million euros of turnover, it's an SME. If you're not sure if you are an SME, you should get professional advice. SMEs can claim an uplift on their R&D expenditure of 175%, which for loss-making companies can be surrendered for a 14.5% cashback, giving a total 24.5% net benefit. In other words, for every £100,000 of qualifying R&D expenditure, £24,500 can be claimed back in cash if you're a loss-making SME. Profitable SMEs claiming the 175% enhanced deduction are able to offset this extra deduction against profit, resulting in a reduced tax bill. The net benefit here for a 21% taxpayer is therefore 15.75% of the qualifying R&D expenditure. If you are a company that is not an SME, you can claim a 130% uplift. If you are paying tax at the 28% rate, this results in a net benefit of 8.4%. The next thing to consider is what costs are actually eligible for the R&D tax relief. Eligible cost categories include gross staff costs, 65% of the cost of agency staff, the cost of heat, light, power, consumables or transformables required for the R&D, software licenses, and if you are an SME, 65% of the cost of activities that you subcontract out to other SMEs in order to perform the R&D. There is also a category of eligible costs called qualifying indirect activities, which includes ancillary activities necessary to perform the R&D, but which are not usually considered as R&D themselves. For example, clerical or financial activities. We hope this presentation has provided you with an overview of the key points of the UK R&D tax regime. As with any legislation, there are often specific nuances that are applicable in different circumstances. The content raised here is of an informational nature and should not be used as a substitute for professional advice. As can be seen, the test for qualifying R&D is a technology-based one. We therefore take a technology-driven approach to R&D tax credit claims, the benefit of which is evidenced in our 100% success rate. If you would like to know more about how we can help you with your R&D claim, ranging from assisting you in preparing the necessary supporting project documentation for HMRC to full claim preparation, then please contact us on the number shown above. Thank you for listening to this presentation.